Carlyle is the best performing alternatives firm year to date. It's up 27%, while its peers are either flat or down. For more on what the firm is doing differently, we want to get over to Leslie Picker. She's in Washington at Carlyle's Investor Day with its CEO, Harvey Schwartz. Leslie, good morning.
Hey, Becky, good morning, and thank you, Harvey, for being here. We're obviously in front of this Oracle Red Bull car. It's because you announced a partnership with them this morning, which is not something you traditionally see with a private equity firm sponsoring any kind of sport, let alone F1. But we've seen this increasingly with the advent of wealth as being a key channel. You've been growing wealth specifically. And I'm curious, how much do you think this segment, the wealth segment, will comprise of Carlyle's AUM in say, 5 years? And how much do you need to spend to really grow that group?
Well, Leslie, great to see you. Fantastic to be here. We're here in D.C. for our annual conference. We have 400 of the largest investors in the world with us for 2 days. The Oracle Red Bull partnership for Carlyle, it represents a lot because, just look at this vehicle. This is like an extraordinary engineering marvel, and it's all about performance, excellence, precision, and those are all the things that we pride ourselves on. So we're super excited about the partnership. Now, in terms of wealth at Carlyle has been important for a very long time. Strategically, we repositioned the wealth practice, if you will, over the last couple of years. And as you mentioned, it's been growing dramatically. So we're very proud of what the team is doing. We have 3 flagship funds up right now, in addition to other vehicles. It's global. And so a lot of this partnership is about global, about reach. It's about sports. It's about connecting with people. But the trajectory of wealth for Carlyle really, to some degree, has no limits. We just want to execute with the kind of precision that Oracle Red Bull does. And so that's our goal. There's
a difference, too, between wealth and high net worth and 401ks, which is something that this administration has been urging its various departments, including the Labor Department, to look into. Do you expect to see widespread adoption of alternatives in 401ks? Is this something that's going to be just a natural fit in everyone's retirement?
So everything we do at Carlyle across the $465 billion of private capital that we manage is about understanding that end client. You listed off, you did something very important there because you listed off the different segments, different client types. We have sovereign wealth funds, we have pension funds. I think that what we're seeing in terms of this question around retirement, it's a natural evolution. Today we'll be spending time with professional investors who have managed tens of billions of dollars on behalf of millions of retirees, firefighters, teachers. So this is a very natural evolution in terms of where the market should head. The key here is making sure as an industry we work with agencies, so we do this in the most thoughtful way. But it really hasn't made sense for a long time that institutions have access to private capital and excess alpha, and retirees do, the wealthiest in the world do, and yet there's a whole segment of the population that would benefit from having these in their retirement accounts. And so, yeah, we look forward to being part of that. But we have to be very thoughtful as an industry about how we execute.
I want to ask you about the private equity logjam, because you just raised a $20 billion fund with the aim of taking aging stakes, private equity stakes, off of other investors at a discount. And we've been hearing for a while about the capital markets rebound. We've seen some of that in the data as it pertains to M&A and IPOs, which would presumably serve as an unlock for companies that are kind of stuck in these portfolios. So does this suggest the opposite, that maybe that capital markets revival isn't as great as it may seem?
So you went through a period where in 2020, 21, 22, you saw a lot of monetizations and you saw a lot of recycled capital. It's not to be unexpected as an industry. You're going to go through periods like this where capital returning is slow. When you think of Carlyle, you think of strategies that are global across many, many businesses, many, many client dimensions. That business that you're talking about, Carlyle AlpInvest, they do secondaries, they do co-invest, they do primary. But what's really happened in that business, which has been a fantastic phenomenon, is it's become a corporate solutions business. So it's not just about the way you described it, where there's this notion of aging stakes that can't be sold.
Right.
It's much broader than that, and actually it's often working with the highest performing managers that can sell stakes and helping them do that in the most efficient way possible. Now, at Carlyle, if you look at our private equity practice, we returned across the entire platform more than $30 billion last year. $15 billion of that was in private equity. So we're actually returning capital at 3 times what the industry average was. So, and we also launched 3 of the most meaningful IPOs in the world last year. Leading IPO in Japan, 1 in India. We did the 3rd largest IPO in the United States. So markets are open, and I would say they're actually increasingly open as we think about the next 3 to 6 months, given the backdrop of what we're seeing in terms of activity.
Yeah, no, that's definitely an area to watch. Harvey Schwartz, CEO of Carlyle, thank you for joining us here
Thanks
in Washington,
so much.
D.C. A car in a hotel lobby,
No, it's great. The only confusing part about this is that, I'm sure you look at me and you think you see Brad Pitt. This is only going to make that problem a little more difficult because you've seen the movie F1, and everywhere I go, people are like, Brad. I'm like, no, just Harvey Schwartz. I know you can get confused. This is only going to add to that. Leslie, great to see you.
Just rev things up, Harvey. Thank you very much.
Thanks so much.
Guys, I'll send it back to you in studio.